Hey everyone, what's going on? It's Rob here. I wanted to do a couple of trade recaps I took this week. I only took 3 trades all week. It was a rather slow week for myself. One Eurusd trade and 2 GBP USD trades. For those of you that are new to the channel, definitely subscribe. I'll be doing more recaps, more teaching videos in the future. But for the time being, let's review Eurusd. So this is Eurusd from November 8th, which was the Monday. Now, if we just quickly look at the 4-hour here, we have a couple of things going on. So right now, you can see that this low was taken. This high is the place that the move initiated. This is your last sort of a demand here. There was no interaction of any sort. We just came right through that. So there was a probability of coming back up here and being able to look for a short. I didn't catch the short. I ended up shorting GU that day. But what I did was I took a long back up to the nearest supply. I didn't hold it to the 4-hour. I ended up breaking even a little too quick on this trade, and it actually broke even and ran the target without me. But nonetheless, I'm going to cover it just for educational purposes. Now, I want you to take a look at what the market's done here. We have a form of inducement here, kind of equal highs. We have liquidity. The chances are is we're going to come up to here and either react on one of the 15s or come all the way to the extreme, which is the 4-hour that started the move. It didn't have to make it up there. In this case, it did. So on the 15-minute side of things, we can see the same thing once again. Price pushes higher. Your flip zone originated from here. You have inducement. Price comes back and taps into here. London shows us it's willing to go higher by taking these highs. So this trade idea was just based on following the order flow London has set for us. Since this high was taken, to me, it was more than likely that the price was going to continue on up. We also had cause to go up. So I used this demand zone here to enter. And reason being is this is kind of the demand zone that caused the last set of higher prices that took this high. Now, as we look at the original tap, for those of you that like the seconds, there was a 15-second flip in here. There was an entry in here. That's not the entry I took. I waited a little bit longer, and I waited for the next chalk and flip here. So once again, we liquidated the bottom and we liquidated the top. So your initial chalk happened with this wick here, swept the lows, swept the highs. Now you respected the bottom of this wick. Like I said, there was a 15-second flip in here. So you could actually say, once you took this high again, you could re-enter this position once again. Now what we're looking for here is the reaction point. And what took out the reaction point? So if we call that our immediate supply that gave us our last drive down, the first thing I want you to note is this is a failed reaction. It failed to take this low. And yes, it reacted to something in here on the 15-second. So as soon as we have a failed reaction, that is the first confluence that we can go the other direction. The second confluence is we have a supply zone here that we react to. This is the reaction point, and we always have two places where we can take a trade from. It's either what took out the reaction point or the extreme. To me, 3 out of 5 times what took out the reaction point works. The other 2 out of 5 times it's the extreme. If you believe in your move and you take a loss on the first entry, you're definitely more than okay to take another entry down here. So I proceeded to point my little entry tool on this little range we had here as something in these two wicks and this inside bar is responsible for taking out that reaction point. So we had come down in here. I had entered this trade, I think wasn't much. I believe it was like a pip and a half or something, maybe 2 pips. Yeah, it definitely wasn't a big stop. I was only looking to take this to this supply. No, definitely wasn't that. I think it was a pip and a half we took on this, because I remember this was a 10R that ran the target without me. So usually what I do is I wait for these highs to go and I'll break even. Or the other way of managing is sometimes I'll just partial out at 4R, I'll partial out 20%. On this particular move, I ended up breaking even too soon. And what had happened is price had started going up and it came back in. I hadn't broken even at this point yet. But then what I seen was price did its dip. And to me at this point, I didn't want price returning here again. So as soon as this supply zone failed, I ended up breaking even. It ended up coming and tapping one more time, just enough to take me out here. And ultimately this trade ran to target without me. And that's totally fine, that happens. I'm not too upset about it. Well, maybe a little bit, but either way, it happens. This is usually why I prefer to leave stops open on Euro, because of stuff like this. But lately I've had really good luck with just breaking even. And to me, a 1 minute zone shouldn't get tapped this many times and still have a high probability of holding. Obviously, in this case it worked out, but that's totally fine. On the GU side of things, so at the same time I told you guys that there was a short here from the from the 4 hour high on Euro, we also end up getting, so there was a short here from the 4 hour high on Euro. I didn't end up taking that short. I was over on GU that day, and this is the exact same short at the exact same time. It's more or less the exact same setup. Whether you caught GU or Euro, it's really really didn't matter. The setup was the exact same here. We had something that caused lower pricing. Now here again, we had a last sort of a demand zone here. Now if we count that as our last sort of a demand, you could say our reaction points in here, and you could say ultimately this little white inside bar caused it. We did wick above that inside bar, but as you can see, it ultimately held and we got lower prices from that. So once we had built our inducement here, I assumed price would come up here and run this low at a bare minimum, which is exactly what this trade was. So this was the second trade this week, and this one actually went for me. I believe we got a 15R out of this one. I literally got tagged into this by spread. GU spread's 0.3 or 0.4. So I barely got tapped into this, but I did. Again, demand zone that gave us our last high, reaction points. So we swept the highs, swept the lows. This is our change of character. And to me, ultimately, I look at what takes out the reaction point. And in this case here, this doji to me here stands out. You could say the initial reaction point was here and this doji took it out. However, if we take a close look at that, this first doji gets mitigated. This next one hasn't been mitigated yet. You have a form of inducement right underneath it with all these wicks. And it's also an inside bar, meaning it's a range on a smaller time frame. So I preferred to use this white candle in this case. Price could have definitely come higher and tapped this one or even the extreme, but this inside bar to me ultimately tapped that reaction point. So that was the trade on Wednesday, I believe it was, and yeah, I'd gotten 15R out of this one. This trade proceeded to run another 100 pips after that without me, but I'm not too upset about it. And I had one more trade here that I took on GU on Friday that I'll just do a quick recap on. And this one here was the exact same setup as always. We look for a chalk and flip. Anytime we have liquidation, it's usually a good area to get in. So here we have proper liquidation. You take the lows, take the highs. The last chalk was a little bit weaker, a little bit more advanced, a little harder to see. This is a complete proper chalk here. We swept the lows, we swept the highs. Again, reaction point, and as always, what took out the reaction point? Well, to me, this inside bar did. And this one here, I think, was a super small stop, especially for GU. Yeah, I believe this one was like a pip and a half or something. It's ridiculously small for GU. More often than not, GU is, 3-4 pips. I just ran the highs here. Might have even been these. Yeah, I think I ran the highs here because I closed this at 11R. This was Friday's trade. I didn't hold it to the top. For obvious reasons, it's Friday. For those of you that are risk takers and did want to see more price action, GU actually gave you multiple entries. So you actually had an original entry down in here. If you covered enough on your stop, you would have been in. The safer entry was this chalk complete off the inside bar. And then you had one more entry here actually where you could have targeted the highs one more time. Again, for me on Friday, I wouldn't be in a trade at that time, but the trade did go and it did run this high. As always, we're looking to take the high to the left out. It did take its sweet time, but it did do it. As always, guys, I say on Friday, just, if you got a chance to close out a quick 5-10R, it's good enough. You don't need to push the market on Friday. Save that from Monday to Thursday. But yeah, that's about all I did this week. Very slow week. Now that CPI is done, I expect next week to have a little better movement. And yeah, we'll cut this video here, and I'll see you guys next week.